outlook and risks. The ongoing episode of high inflation initially emerged.
Guys, what's up? The stream has already started. I'm sorry for being a bit late, but Jerome Powell has already started speaking, so I hope you're all doing great. I'm going to try to fix this as soon as possible. You should be able to hear it right now, I think.
Pandemic-related demand and supply.
So I'm going to fix that as soon as possible right now. So yeah, welcome to the stream. We will listen to this first. Let me know if everything is all right. So let me know if
the process still has
if you can hear it all right, if the audio is all right.
On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3%.
All right, it should be good.
Have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline.
Yeah, my voice might be the voice of Jerome Powell.
Food and energy prices
all right,
are
let me know,
influenced
because
by
I
global
put
factors that remain volatile
the
and
subtitles.
can provide a misleading
That
signal
might
of
be
where
enough.
inflation.
All right, let me quickly do a little bit of an intro. So we'll watch Jerome Powell first. We'll listen to the stream. Here and there, I'll probably do a little bit of commenting on it. Maybe if it has any effect on Bitcoin that you should know or not. And then after that, we will do some analysis, just requests. All right, so you can request some cryptos. I'll try to analyze them as well as possible. But for now, let's listen to the speech for a little bit.
Further progress, it is useful to separately examine the three broad components of core PCE inflation. Inflation for goods,
I'll keep an eye on
for
it
housing
here at the top.
services,
And if I see a lot
all
of
other
movement,
services,
then,
sometimes referred to as
we'll
non-housing
check into it.
services. Core goods inflation has fallen sharply, particularly for durable goods, as both tighter monetary policy and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities.
So far, nothing important.
But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply because of the combined effects of these supply and demand factors. Similar dynamics are playing out for core goods inflation overall. As they do, the effects of monetary restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed, and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure.
So
the
far,
slowing growth in rents for new leases
really
over roughly the past year can be thought of as in the
so if it
pipeline
on
and
like
will
this,
affect
we will
measured housing
not
services
keep watching
inflation
the
over
speech
the
and we'll
coming
just do
year.
some analysis.
Going forward,
just
if
so you
market
know,
rent
because
growth settles near
not going to watch
pre-pandemic
a
levels,
full stream
housing
of just,
services inflation should decline toward its pre-pandemic level as well.
But maybe,
and we will continue to watch the market rent data
something.
closely
He said
for a
some
signal of the
interesting things
upside
at the
and
beginning.
downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index and includes a broad range of services, such as healthcare, food services, transportation, and accommodations. 12-month inflation in this sector has moved sideways since liftoff. Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks and are generally thought to be less interest sensitive than other sectors, such as housing or durable goods. Production of these services is also relatively labor intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation, restrictive monetary policy will likely play an increasingly important role. Getting inflation sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions.
But we're seeing some
restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well by nearly 150 basis points. Beyond changes in interest rates, bank lending standards have tightened, and loan growth has slowed sharply.
All right. Well, thank you for pointing it out. You should be able to hear me now. What I said is, so far, is that it's a bit bearish what he's saying right now. We're seeing some bullish reaction, though, from Bitcoin, even though it's overall, over the last hour, it's still bearish. And I also said somewhere earlier that so far, I very much doubt that this speech is going to mean something significant for crypto. So we will watch for a little bit longer. It's quite interesting altogether, but if it doesn't really have, or if he's not going to talk too much about the monetary policy for the rest of the year, which is most important for crypto, we're probably just going to stop watching after some time. I think the speech is like half an hour long. We're not going to watch half an hour. That's too boring. So I think we'll watch a couple of more minutes. Maybe he says something that's interesting, and then if not, we'll just go to some analysis. All right. So that's and the dollar strength index right now is actually pretty bearish, which is interesting because that would mean bullish momentum from Bitcoin, even though that's not necessarily what we're seeing right now. So that's what I said.
Participation rate of women in their prime working years reached an all-time high in June. Demand for labor has moderated as well. Job openings remain high but are trending lower. Payroll job growth has slowed significantly. Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions. This rebalancing has eased wage pressures. Wage growth across a range of measures continues to slow, albeit gradually. While nominal wage growth must ultimately slow to a rate that is consistent with 2% inflation, what matters for households is real wage growth. Even as nominal wage growth has slowed, real wage growth has been increasing as inflation has fallen. We expect this labor market rebalancing to continue. Evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. Turning to the path forward.
Okay, this might be interesting because this is about the future.
Our inflation target. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time. It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the neutral policy rate. We see the current stance of policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. But we cannot identify with certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint. That assessment is further complicated by uncertainty about the duration of the lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over the past 7 months. And we have substantially reduced the size of our security.
Zapier's automation is the easiest way.
All right, that's our cue, because I'm not going to watch. I'm not going to watch an advertisement with all of you. It was quite. The last part was quite interesting, but I mean, in the end, we're just going to see the results on the charts. So far, the dollar strength index has been quite bearish, which I mean, we were at a resistance level as well, so that probably partially explains it. But the other side of it is that the reaction is that the monetary policy might be a little bit less tight than we expect, which is bullish, and that's also why we are seeing some bullish momentum from Bitcoin right here. Now, if that if that bullish momentum will actually continue or not, that's the big question. All right, because right now, if we're purely talking about and before we do some analysis requests. I want to do a little bit of a general overview of the market. I think most of you will appreciate that as well. So what we're seeing right now for Bitcoin is a lot of bullish momentum right here. So I maybe have to change some signals while streaming. So keep an eye. I'll just have to check that. But for now. Just going to put some price alerts here, and it's fine right now. See, the main thing is that the dollar strength index is very, very bearish. So then we're getting a lot of bullish momentum from Bitcoin. But the main thing for Bitcoin is whether we can break above 26,300 or not. All right, this candle closes in an hour and 3/4. If we can actually close above this with the 4-hour time frame, above 26,300. Then I expect more bullish momentum towards the $27,000 regions. If we're not able to break above this though with the next candle, I very much doubt that we will at all. And then it's more likely that we'll just stay in this range, and that will actually drop back down towards 25,800 and 25,700. Because in my eyes, we did not really, or in my ears, we did not really hear anything that would be so bearish for the dollar strength index. But obviously the charts know best, all right? So the best things to watch right now are the dollar strength index and Bitcoin. If Bitcoin actually gets this bullish breakout above, like I said, 26,300, you should expect bullish momentum from the entire market, all right? So from almost all altcoins that are relatively correlated with Bitcoin. And if you want to check that out, then you can just check out this crypto correlation. Go to this website, and there you can actually check out all of the correlations. All right, so that means that the closer to 1 it is with Bitcoin, the more it moves like Bitcoin. But all right, it's time to do some requests. I'm not sure how many I can do because I have to maybe work a little bit on the signals and check that out in just my own trading. But if you have any requests, this is the time to let me know down in the chat, all right? And I'll try to do some good analysis on that, if you want to, all right? Apart from that, personally, I'm looking at some trades. Personally, I'm short on LivePair. I will be shorting Acropolis soon. I will be shorting Bluezell soon. I'm looking for some sort of a short trade on Rune, but I'm not too sure about that yet. I have some price alerts set up, so that's something that's still coming. Shiba Inu and Pepe. We'll start with those. I also made videos on those this morning, all right? So it's for Shiba. See, it is a bit difficult to analyze right now because of Bitcoin's volatility, but at this point of time, I would still say that it's most likely for Shiba to continue its bearish momentum. All right, we rejected heavily here off of these levels between 850 and 830. So to me, it seems most likely that we'll drop back down to 780 and 750 until we get some news about the relaunch of Shibarium, or if Bitcoin gets a very bullish breakout. That's in general what you should know. If Bitcoin gets a massive bullish breakout, most altcoins will follow that, and you should probably forget what I said. But for now, it still looks most likely that we'll drop down to 780 and 750. And for Pepe, see, because of the news that we got, because Pepe got, well, at least there were some troubles with a wallet of Pepe. So with Pepe right now, it's we're waiting for a bit of news about that. If we actually get news that more Pepe coins were moved, I think we'll drop down all the way to 6,000 down here. All right. However, I think it's a bit more likely, due to also what we're seeing from Bitcoin, I think it's a bit more likely that we can consolidate here on top of 8,000, maybe a liquidity spike down to 7,500. But in general, a consolidation between 9,000 and 8,000. And then at some point of time, if we can actually get some bullish momentum from Bitcoin, some recovery up to 10,000. Usually Saturday, Saturday is usually also a little bit bullish for Pepe. All right, Bluezell. See, Bluezell, I also made a video on this, guys. So if you just watch my channel every morning, you'll see these analyses. But for Bluezell, to me, this is the situation. And that is that we're stuck between 12.5 cents and 11 cents. And which one of those is going to break first is going to dictate what's going to happen. If Bluezell is actually able to break above 12.5 cents, I think we'll move back up to 15 and perhaps even 17 cents. That is possible, especially with manipulation like this. But if 11 cents breaks as a support level right here, that's a massive bearish breakout, and then it's more likely we'll drop down to 9 and 8.5 cents. It's just waiting for confirmation. Especially with these manipulated cryptos, the best thing you can do is just to wait for confirmation. All right, and I cannot stress that enough. But let's see some other. Tomo, well, what happened with Tomo is manipulation again. I mean, look at this. Tomo, if you take a look at the daily time frame, it has been in an uptrend since March, a huge uptrend, already crashed once before. But the thing is there was no reason for this huge uptrend. Like, especially right here at the beginning of July. We actually started a new trend, which at the very top reached over 84% up. Well, there was no news supporting that. So at some point of time, if you rally this much without any sort of news or without a reason, you're going to get a crash. And Tomo, I mean, personally, I don't trade Tomo because of this. It's just too manipulated and too... Yeah, I mean, I would just stay away from it. It's not worth it. There are so many opportunities to trade in the markets. And Tomo is just, well, personally, I've burned myself too much on it as well. So it might be a little bit subjective, but it's just not worth it to me. Sei, all right, let's take a look at Sei. Also made a video on this morning. But that's the last time I'm going to say it. Sei actually got a massive bearish breakout right here. Broke down below 14 cents. So to me, the most likely scenario looks like we will get a bit more bullish momentum, but then followed by a drop down to our next support level between 13 and 12.5 cents. Now again, and I do want to stress that, if Bitcoin for some reason becomes very, very bullish and gets a bullish breakout, then we could actually see, say, break above 14.3 cents. And then all of a sudden, Sei is bullish again. But that's, at this point of time, like with the current situation for Bitcoin, it doesn't seem like that's something you should take into account. But that's a little bit subjective, of course. All right, let's see. Conflux, I'll do that. I haven't analyzed Conflux for a long time, but I will for you. Let's see. Yeah, Conflux is just dying right now. Like, we dropped down all the way to 11 cents right here. Just in general with Conflux as well. See, Conflux had a lot of great news at the beginning of the year. That's 100% true. But then again, sometimes like one of the biggest skills you need to learn in crypto is to kind of be able to accurately measure how much a crypto should move because of certain news. because Conflux got a lot of great news, but in total it rallied up 1,500%. That's just disproportional, all right? So that's why we set in this huge downtrend, and that's also why I think we're going to drop down lower. At this point of time, it depends again a little bit on Bitcoin, because if Bitcoin actually can recover a little bit here, so if Bitcoin, let's say, gets up to 27,000, then Conflux is going to be able to set up some sort of a consolidation right here around 12.5 cents, which I actually do think is possible. But if Bitcoin stays bearish, stays at these levels, it's just a matter of time before Conflux drops down to 10 cents. And after that, I even think we'll drop down to 8 cents and 7.5 cents. But this, like this move, I still think is going to happen within the next 2 or 3 months. So it's a bit long term. And on the short term, like I said, it's very much dependent on Bitcoin. If Bitcoin stabilizes, Conflux will do the same. If Bitcoin drops down, Conflux will do the same. If Bitcoin goes up, Conflux will follow that a little bit, but not too much. That's usually what you see in a bear market, is that if Bitcoin is bearish, altcoins are more bearish. And if Bitcoin is bullish, altcoins are less bullish. Just in general, a tip, I guess. Compound, FLM remote crypto. I'm not sure if I'm going to cover that, because FLM is in my eyes, it's just I don't think you can do some real analysis on that. I mean, I've known FLM for quite a long time, and in my eyes, it's just been manipulated practically since its inception. Like we've basically only had these big spikes and crashes. So it's very difficult to analyze that technically. But all right, Compound. We'll do 3 more, guys, because I have to go as well. But we'll do Compound first, because that's I do have an opinion on that. I'm actually short on Compound right now. So where is it? Right here. I'm actually short from this area right here. So that's a pretty decent trade so far. What we're seeing right now, see Compound, same thing, and I keep repeating this. Compound rallied a lot in the last 2 months, right? So it rallied from here all the way up to here, 183%, without a real reason. So you can expect it to at some point of time come down. And that's also what you're seeing right now. Right now we're getting some bullish momentum right here. And I actually do think we can have some sort of a bearish flag all the way up to $50 and $52. But eventually I think it's a matter of time before we drop down lower towards $36 and $32 probably again. But for now or at least Compound seems pretty steady. Again, it depends quite a lot on Bitcoin, unfortunately. But it does look pretty steady, so I think we'll just consolidate with a little bit of bullish momentum. But at some point of time, like I said, I do still expect a drop down to $40 and then down to $35. Let's keep it at that, a little bit more conservative. All right, what do I see as well? Ocean. I've recently deleted Ocean from the cryptos I analyze because it's actually pretty interesting right now. This is actually Ocean got quite a lot of bullish momentum and did quite a big recovery right here. It's actually like this level right here. I might actually short this for Ocean at 33 cents. Because what you see right now is that there's actually quite a lot of bullish momentum right here on the short term. Ocean might be a bit manipulated. That's something that Ocean has been before. Like if you take a look at the volume, it's okay. It's all right. Well, that's interesting. I at least have my price alert set up, but it looks like initially, it looks like we are actually able to hold some sort of support here, and that if Bitcoin can actually get some more bullish momentum here, I think Ocean can get all the way up to this level right here, around 33 and 33.5 cents. Personally, I don't think we can break above this. I think it's a great short area actually, and I'm not even sure if we can get up there. That depends on momentum in the markets. But altogether, I think if we get up there or not, at some point of time, we'll drop down towards that 30 and 29 cents area. And I do think we can form some sort of a consolidation here for Ocean. All right, last crypto. And then I have to get back to work. Let's see. GMX was requested. I think I'm trying to do this a little bit in a fair way, where everything that's requested first gets analyzed. But I must say that I haven't analyzed GMX for some time, so I'm not sure how accurate my analysis is going to be. But I'll try my best. At this point of time, it doesn't look great right now for GMX. It looks pretty bad, to be fair. Like we're getting towards these bottoms we made on the 10th of November, around $25. And I actually do think that's the most likely scenario. Like a chart like this, you want to stay away from it. We might see a bit of bullish momentum, but the thing is that if you drag a Fibonacci right here, I think that's the best way to go about this for now. If you drag a Fib like this, but also one like this, I think you'll get a little bit of answers. See, the main level I would say for GMX, just to do a bit of a more general analysis, is this level between $41 and $40. GMX can rally because GMX has rallied in the past, but the only way it actually can rally up to like $45 and maybe even $50 again is if we break above $41. And you can see as well as I can see is that that's very, very far away. So at this point of time, if I would have to have probabilities of either breaking above $41 or dropping back down towards, well, I mean, $30 is first and $35 is first here. But altogether, I do think it's way more likely that we'll continue this bearish momentum. All right, so unless Bitcoin suddenly gets up towards 28,000, the most likely scenario is consolidation and then a drop down to $35, consolidation, and then slowly dropping down towards $31 and $30, and then afterwards we'll see again. But yeah, that's the stream for now, guys. We have streamed for how long? Almost half an hour. Was great to be back. Adebayo, it doesn't seem like it, because if Powell would have said something, we would actually see a lot of momentum here. Yeah, the dollar strength index is strong, so that would suggest that he's saying that interest rates need to be kept higher for longer, and that's also why Bitcoin is bearish. But altogether, like if you zoom out, this movement is minimal. So I wouldn't say that he has said anything too crazy. So they are still hawkish right now. They have been hawkish for over a year now, I believe, and there has been no change. But that's the stream. All right, guys, don't forget to join the Telegram and the Discord as well to actually keep chatting. They're both free. And there's a lot of talks about different cryptos, trading, and just in general. And in there, I also post announcements for my streams. I post charts. Everything is in there. So make sure to join that if you're interested in that. But for now, we're leaving the stream. So I want to wish you all a great day. Thank you for being here. It was a great stream, and I'll see you all in my next stream or videos.